Hello, I'm Marty Ellingsworth, a senior analyst with Celent, and I'm here today to talk about the consumerization of personal insurance. Data analytics and cloud are part of everyday experiences now. And it's not just insurance, it's everything from Amazon to Google searching to checking your time, looking for everyday items like a recipe, a workout video. As we're working at home, there's even more and more do-it-yourself or even self-documenting processes for work, for home, for ordering, for tracking logistics, for having deliveries. Everything now is becoming about the experience economy and the way of using new data to create better experiences around personalization and digitization, and the ability to use algorithms and processing power in today's environments are creating mashups of information never before available at speeds that are in line with our everyday living experiences. So it's almost like magic that things are happening. When we come to think about our financial lives, we see our bank accounts being more accessible. Remote deposit is take a picture of a check, have it deposited in your bank. You can email people and have them give money. You can text them money. You can do all sorts of payment processing. And the idea that those types of experiences from the Amazon, the Apple, the Google, the banking experiences should also be available for insurance. Like you dent your car, how come it takes so long to have someone look at it? Those are becoming table stakes now for insurance companies to compete with the level of experiences being set by other industries and other competitors outside of the traditional value chain. So the marketplace is now expecting, at the consumer level and even small business level, electronic connectivity. Touch point knowledge is anticipated. Like if I've been your customer a long time and I've interacted with you many times, you'd expect that when I call again, you'd remember me. So that personalized service, the ease of doing business is being met now with a new tolerance for companies not learning. And that's where AI and data and the cloud come in as partners in this process to use the digital information about a consumer, stitch it together to create a full view of them and their living situation and preferences, and to understand their riskiness about how they live, where they live, the different risk around them, so that every company can define and attract and retain and grow good customers. And with the forward-thinking, risk-based pricing systems and programs that are coming to market today in most places, especially for personal lines, you can match the offer to the customer. So higher risk individual would still get the best coverage they could at the best price they could in market, which would be best suited for them. Inside of all that, though, the customer-facing processes, the experience of insurance, the time and friction and expense to manage the data and that customer are all part of the operational and analytics to bring more efficiency, more productivity, and more personalization to the everyday experience, so that the cost of doing services is lower and the price that you could offer your consumers are lower. Because everybody wants what they want, when they want it, at the best price they can get it. And the ability to shop now is as easy as clicking on a web link or clicking on your phone to say, I want to shop for insurance for my car, my house, my rental, whatever. So it's a very much different world than 20 years ago when everything was done by paper. So people today are more connected than ever. Their mobile phone is kind of the central hub of many people's daily lives, certainly for teenagers, if you have one of those at home. But I can't think of anyone that I know that does not have a mobile phone or a smartphone or access to one. And in case your phone broke, you could go to your tablet device, your home device, an internet connected device. And what you're seeing is that these devices are smart at the edge. They let you set your preferences on the color schemes, the backgrounds, the camera settings, the privacy settings. You can understand everything about you around your location because they're map and GPS enabled. You can manage all sorts of payments and purchase histories on your device. And your device and your schedule and your calendar and day of week and your language of preference can all be connected to your mobility, your friendships, your social networks, in an integrated fashion, give you your own personal hub of you. And the ability for companies to interact with individual hubs is what everyone's seeking, because they say, all my information is already here. It's right connected to me. I look at this every day. This is what I'm expecting when I want to interact with a brand or with a company, is that I can do it seamlessly and easily from wherever I'm at, whenever I want, using this device. So this personalization and digitalization has started at the consumer level and is coming to business. It's different than companies have created something and they want to force it down on customers. This new concept of the consumerization of everything and the experience economy is now pushed into insurance. And it got started with the internet and has driven further and further and further to the edge, closer and closer and closer to the individual, as the ability to put data and computing process and connectedness into the hands of individuals across the world. This is still a big problem for most companies, especially in insurance, because they're more like the far right, a green screen, slave to a terminal with a hardwired keyboard accessing it. Maybe you'll see a couple companies that have that same screen hidden behind a pretty layer, sitting on two screens with a fancy keyboard or even a wireless keyboard and a headset. But for the large extent, there's many core systems that are on-prem, on mainframes or mid-frames or mid-tiers, or the different cascades of hardware and software applications. But they're still very core to a fault, where the system of record is on a piece of iron, not in the cloud, not accessible from everywhere, can't talk to everything, and certainly isn't, able to manage the multiple channels of social, e-commerce, tablets, search engines, displays, emails, agencies, and individual consumers for direct-to-consumer plays. Where one would think that the easiest way to do things would be let the consumer interact directly with their platform and don't touch them if you don't have to, because if your user experience and your design is so customer centric, they can self-serve, and that's easy for them and efficient for you, and the two things grind forward with a risk-based pricing system, so that you'd have the most effective, cheapest, best product with the highest service excellence. And that's where we see a lot of things happening in the market today, not just insurance, but the ability to shop online any time of day or night, have things delivered, and even remember what you bought before. So you buy the right sizes and you don't buy duplicates of anything unless you intend to. When this comes to the insurance value chain, which is chevroned across the top, from marketing to contact management to quoting and underwriting, renewal, compliance, and even all the other wraparounds of claims management. And I throw an umbrella here as the catch-all of risk, as well as for the catch-all of your risk transfer in life. Going from the game of life meets the game of risk is an interesting dynamic, where as individuals' incomes rise, their expenditures also tend to rise. And as they spend money on assets, the need to insure them, either because of they want or need to, or because they don't want to risk the economic damages, or they're compulsory ordered to get things like auto liability insurance. All of these different things change across life. And the more stuff you have, the more risk you generate, the more insurance you tend to have. You might go from a $100 renter's policy with or without a cell phone rider or smartphone rider, all the way up to $5,000-6,000 a year for a house, 2 cars, some life insurance, for a mature family. And then as those age, teen drivers move out and mature drivers retire, and things kind of have a natural resolution as your assets go back to being wealth intergenerational transfer. So that life cycle event is where all the different products and risk pricing meet, and each one of those has been traditionally stovepiped and siloed into decades-old systems of record. And that's the constraint where many of the newer, faster, smarter insurtechs are moving in and saying, hey, the experiences you're getting from Amazon delivery or Google search or Apple device interconnectivity should also be available for every other product. And those design and experiences are changing how consumers shop and changing what they demand and how they rate you as a service provider. But as a service provider, as many of our clients in the company in the market look like, they are very stovepipe. Their value chain is actually, every link is kind of an independent silo of historical data, historical code base, historical operating processes. Even if you started a company and then cloned it and started another company right next to it, 6 months to a year later, based on their strategies, their lines of business, their understanding of their customers, they would have customized those systems in such a way, in such a short time, to be unidentifiable, and you wouldn't be able to merge them seamlessly. So as you think about companies that have grown in multiple lines of business across multiple decades with multiple channels, the penultimate multi-channel, multi-line company, it's not uncommon for them to have dozens of systems and duplicate, seemingly operations systems, multiple call centers, multiple claim systems, multiple policy by products. So the big impediment for reacting to a consumer who wants to be digitally findable and personally engaged doesn't have a way to push their information or their needs or preferences to any place in this product siloed historical multiple lines of business entity, whether it's one company or multiple companies, where that's easy to do, seamlessly experienced, or easy to fix or change. The big front end insurtechs are trying to make it easier and easier to shop by making that the channel and marketing and agency side of the house easier to connect to, and pre-fill and other types of underwriting rules engines are trying to make it easier to move from one company to another. And that's all been in, I think, in effect the last 5 to 10 years for sure, maybe 10 to 15 for other companies that were early adopters. But it still gets to a point in the claim system with all their vendors to manage property damage and medical cost and medical cost containment and all the variety of specialist units inside of a claim system, that by the time they get over to the information systems and IT professionals and the chief data officer, chief analytics officers, which are just now starting, everyone's still kind of behind the curve on catching up to digital. Words like transformation and modernization is basically euphemisms to say we're product-centric and siloed in our applications code, and we don't know how to talk to a digital customer in a personalized way. And that's every line of insurance. I'm focusing on the consumerization of personal lines. I think auto is the most widely acknowledged line of business where people would have a car but maybe not a house, maybe not have life insurance. Back to that game of life process, there's a lot of young people that have cars for mobility, and that's a one risk, one person type of living situation. So living situations get more complicated with partners, with children, with aged adults, with all sorts of other financial risk and safety concerns. It gets more complicated. But at the easiest side, it's one young person, one car, one old person, one car, no one else around to make underwriting or pricing difficult. Even those situations, we don't have the ability to take our historical systems and that are product based and really tune into what does this person need now and what do they need next and how's the best way for them to do that. Over the last 20 years, that kind of one risk, one solution has creeped into the market with a direct-to-consumer channel and then expanded from the one risk, one car non-standard market perhaps to the standard and preferred markets, and then went faster and deeper with better pricing, better risk understanding, cheaper rates, easier to do, lower expenses. And those channels, as you look at this chart between 1998 and 2018, on decade over decade, you can see the top 10 personal auto insurance companies grew their market share from 2 out of 3 drivers on the road to 3 out of 4 drivers on the road. And the smallest companies, those would rank over 50, which might be in the low $100 million and lower in terms of direct written premium. Their market has been cut in half in that same time frame. Now, it may feel like all the top 10 are rising at the same rate, but that's not true. Only 3 companies, actually grew their own personal market shares in the top 10 competitors in that time frame, and those are Geico, Progressive, and USAA. All 3 of them are direct writers. USAA is a membership company, so it may not have the top side of a Geico or Progressive in terms of addressable market, but each of those companies can be more efficient, pay less in commission, and maintain their brand with focus differently than other companies that have to struggle with distribution where customers can't find them directly. Inside of this value chain, you can see historically, marketing and sales, the awareness and quoting process for direct-to-consumer advertising has been just gangbusters. If you're in the US markets, you can't go outside in public and not see, in some commercial area, some sort of insurance advertising. If you're online or on the radio or on the internet, it's almost impossible to not see a commercial for one of the top brands. Oftentimes, the caricatures of the gecko or of the flag with USAA or with Flo at Progressive, the State Farm agent, the Allstate, Mayhem character, all the way down to Nationwide is on your side jingle, the Farmers University. I'm sure, hopefully I had a big enough group of people just to call out. I didn't mean to, not mention a brand, but it's one of those things where their awareness campaigns now have got the unaided awareness at the consumer brand level to know that if I was going to go and search for a company, if I saw one of those come up, I'd probably feel comfortable that they're in market, they're popular, they're maybe financially secure and big. So my peace of mind of should I write with them would be more easily accessible. So getting 3 quotes for a competitive bid, as long as it included one of those, my current carrier, and then one other one, would be pretty simple and easy to do in a rating system. The place where you're seeing a lot more consumerization is how do we create underwriting and rating systems that look at real-time information, or even geo-tracking, smartphone, driver-based information, to measure not just how much you're driving, but how are you driving and when are you driving? Because those types of things, when collected in a holistic way, paint a picture of what a risk would look like, that would differentiate one person versus another, based on how they operate a car, where they operate a car, and when they operate a car. Certainly also how much they operate a car. Those go into a variety of product and pricing and onboarding solutions, and they are differentiated by servicing and operations. All of that digital experience, as well as agent and maybe even paper-based experiences, would still need to be run through the routine compliance, fraud, and risk management models. And finally, if there is a claim, claims and claims experiences and subsequent issues around litigation and subrogation and fraud would also all be part of that process. And that's where data analytics and cloud are coming in to hijack all the historical data and bootstrap it into a whole new world of digital experiences. And the upshot of that is faster cycle times, quicker time from accident to repair or accident to payment, and better experiences for taking the concern over, is this claim covered? Is my loss going to be something I can handle? And how, what happens next? Because claims are pretty rare, is something that's everyone's focusing more on now. Where companies are starting to wake up around, I need a chief data officer, I need a chief analytics officer, I need both in one, or I need two separate. They need to report to IT, they need to report to the board. Is this kind of a shock and awe process of, I thought we had this data, and it turns out that while it's visible in the operating process, the quality, the timeliness, the accuracy, the historical availability of some of these data elements that you see every day may not be part of your operating model, may not be part of your archive system, may not be part of your operational data. So finding the data that you think you have and then rationalizing it into getting it electronically available is no small task, especially with many system changes and code value changes over time. Moving that into seeing it so you can understand what you do have and how to interpret it, and then moving that into the business process resolution of what do you see versus what really happens, and is it an accurate portrayal, so that you have a standing thought process of, if I see this in operations, here's what's going to happen next. And then you can start doing predictive analytics and even A/B testing for test and learn to say, well, here's what I see. I'm going to try a few different things. I want to see what happened next. And from there, I'm going to make better processes and better experiences and better outcomes on a variety of dimensions. And maybe, in many cases, maybe multiple objectives at the same time, by re-engineering a process, creating better data, creating better models, or creating a better decision support process to improve an experience for the customer, as well as the agent, as well as the employee. So while I'm not going to dig on this slide specifically, it just rehashes in a nice, easy framework. The underwriting comes into a data set, which allows you to understand what your book of business and portfolio are trying to do. When you have a claim, there's an assignment, investigate, evaluate, negotiate process with many different stakeholders potentially involved. And the feedback of that process, which we would say an outcome, would go back into the data set so that you can see, I thought the risk was like this, I thought the claim was going to be like this. And when I do this, tens of thousands, hundreds of thousands, millions of times, the ability to create, new outcomes and new experiences systematically is the part of risk management and consumer delight that is the end goal strategy for pretty much every enterprise today. What's different today is everything now is data, and the digital and personalized devices that people have create a digital exhaust. They create provenance, they create verification, authentication. They have sensors, including cameras, voice and video capabilities, soon maybe augmented and virtual reality capabilities to overlay data. But they certainly have GPS coordinates, timestamps. So the ability to create a geospatial temporal framework of understanding of an entire country, of every house, every car, every person, isn't where we are today, but it's where everyone imagines will be in the smart city, smart country of the future. Everyone who's designing a building or a car or a smartphone is thinking through connectivity and preferences and personalization as a design element for their next level of engagement. When we think about better data, better analytics, better decision support, I won't go through all these different algorithms or ways of using data or types of data to use, but this slide is indicative of the circle of creating better customer experiences as a byproduct of all of these incremental or step changes in a variety of different areas. The business knowledge to understand what does the customer want and what experiences are causing them friction now and what's going to happen to the consumer experience and the business profitability. If we address that is what advanced analytics is meant to do. So pairing business knowledge with operations, with data availability, computational power in the cloud, where you can have excess capacity on demand, and also find out analytic talent, either in your own shop through systems integrators or consultants, or in the cloud themselves as experts that are helping you do automated machine learning and artificial intelligence systems by today putting together code that you can assemble versus have to craft line by line. When you ramp this up to real-time identity management and real-time data feeds, things get a lot more interesting for being able to manage insurance and risk transfer in a digital world. And that can go from understanding your assets and tracking and location to understanding the people and processes, the environment in which things are operating at work or at home, and then how things work remotely with telehealth, patient compliance. Data that you'd always wanted but never had can now be part of the solution. I show this next slide as just an expansive understanding of, at every level of analysis, at every level of investigation, there's more information now, more available either through open standards, proprietary standards, or manufacturing design purpose than ever before. And the ability for outcomes to be the target of interest for machine learning and AI systems to go out and say, how can I improve this outcome by looking at any of this other information to resegment the experience or to resegment the risk group. That's like the next wave of what's going on. So to define that all in a nice easy grid, as we're starting to wrap up the idea of, now that you see consumers are gravitating to being digitally engaged, they may now, with COVID and other issues, want to be touchless and seamless and faster than before, because the level of expectation is rising with every new consumer delight that comes by, whether it's streaming media or order on demand or delivery of everything you want to order. those are coming due to their interactions and engagements with their financial service providers and their insurance companies as well. So this grid talks about old data and old methods moving into new data and next data or alternative data. And the common process would be for a company with using old methods to improve their old models by adding new data to their old models. And that might be better understanding of claims or underwriting or better actuarial models, or just simply unlocking more refined data from a PDF document or a text field in their system than they had before. And then as you span up to new methods and next data, you might look at real-time recognition and detection and response of this top right-hand box, where you can do authentication and transaction approval using a facial recognition algorithm, pay by face even, pay by word, pay by passphrase, authentication in the moment, all those types of ease of use and digital engagement are coming from all sorts of point solutions today, but that might be the norm as we go forward, both for consumers as well as for employees. So just to wrap this up, looking backward, pricing strategy was the key driver for market success of the direct-to-consumer insurance companies and auto. That has expanded into other lines as they start to take those youthful drivers and the more wealthy families with more assets, that they came with a superlative experience and a better price. They've been able to gain market share over and over again. That pressure is going to stay on top. Those early adopters, gain the advantage of how to get to market, how to go digital, how to do DevOps and machine learning ops, and being ahead in that race is extremely important, because catching up is, from a diminishing base of customers, is even more pressure than trying to stay ahead. Looking forward, the competitive pressures of price of consumers who have more financial anxiety, who may be driving less because of job loss or health concerns, that's going to drive the premiums down for personal auto. It's going to make risk-based pricing more important. It will make the dynamic understanding of how much you're driving every day, every week, every month, something that could seamlessly be billed directly. So miles-based pricing, while it may not have been fit to many consumers' palates in the past because of the variable charge rates that could go through, in the current environment, it might be an even bigger rush to digital bill as I go, and help me improve my risk to the best of my ability for risk-based pricing. So I'm not going to blow the whistle and say that that's absolutely happening, but I think that the consumers being mindful of risk as well as reward in their purchasing of compulsory products is going to be a theme of the rest of 2020 and on into probably 2025. If it gets started, it'll be hard to turn back. If you have any questions, please contact me at my cell or my social link or my email at work, or through your account rep. And I look forward to following up with anyone who is more interested in hearing more about this. And anytime you want to talk about analytic strategy, data, AI, and cloud, I encourage you to talk to folks at Celent, because we've seen a lot of things and can help you with your strategy too.